Disclaimer: this video is for educational purposes only and does not constitute financial advice. Always do your own research or consult a licensed financial professional before making any investment decisions. Welcome back to Money Mindset, where investing finally makes sense. Today we're diving into one of the most requested topics on the channel, the 5 ETFs every beginner should know about. Not the fanciest, not the riskiest, not the ones promising to double your money overnight. Just the simple, essential ETFs that build real wealth over time. Before we start, don't forget, hit like, subscribe, turn on notifications, and comment which ETF you want me to break down next. New videos every single day. Let's begin with ETF number 1, the S&P 500. If you only ever learned one ETF, it would probably be this one. The S&P 500 tracks the 500 largest companies in the United States, representing about 80% of the entire US stock market. Big names like Apple, Microsoft, Amazon, Nvidia, Tesla, they're all inside. So instead of trying to pick which tech stock will win this decade, you just own all of them. Historically, the S&P 500 has delivered around 10% per year on average, but with ups and downs along the way. For beginners, this ETF is the foundation. It's diversified, low cost, and easy to understand. You're basically buying a slice of the US economy. Now let's move to ETF number 2, the MSCI World. And despite the name, the MSCI World is not the whole world. It's made up of companies from 23 developed countries. That means the US, Europe, Japan, Canada, Australia, and more. Around 1,500 companies in total. This ETF gives you global diversification instantly, so you're not relying only on the US. However, and this surprises many beginners, even though it's global, the US still makes up more than 60% of it. So the MSCI World is global ... but not equal. Still, it's one of the best set it and forget it ETFs you can buy if you want simplicity, stability, and broad exposure. ETF number 3 might be the one that excites beginners the most, the nasdaq 100. This ETF holds 100 of the biggest non-financial companies listed on the NASDAQ exchange, which means tech, and more tech. Apple, Microsoft, Nvidia, Google, Meta, Netflix, the giants of the digital economy. This ETF is the growth engine of the list. It's more volatile, more concentrated, and can drop harder during market downturns, but long-term, historically, it has absolutely crushed most other indexes. If the S&P 500 is the steady marathon runner, the NASDAQ 100 is the sprinter, explosive, powerful, but tiring. For beginners, this ETF is great as a complement, not as your only investment. And that brings us to ETF number 4, the Emerging Markets ETF. This one gives you exposure to fast-growing countries like China, India, Brazil, Indonesia, and more. These economies are younger, growing faster, and sometimes more unpredictable. Yes, emerging markets can be extremely volatile. Political instability, currency issues, and regulation can swing prices fast. But here's the key point: in the next 20 to 30 years, many of these countries are expected to become major global economic powers. So while this ETF shouldn't be your entire portfolio, it's a great way to add diversification outside the developed world. Finally, we have ETF number 5, a Total Market ETF. Think of this as the carpet sweep. It gives you exposure to the entire stock market of a country, not just the big companies. For example, a US Total Market ETF includes large-cap companies, but also mid-caps, small-caps, and even micro-caps. You get everything. Why does this matter? Because sometimes the biggest growth doesn't come from giant companies, but from the smaller ones that suddenly explode. A Total Market ETF captures that upside automatically, without needing to bet on which small company will make it big. This ETF is perfect for beginners who want to invest broadly without thinking too much. Just buy the market and let time do the work. So let's recap the 5 ETFs every beginner should know S&P 500, exposure to the biggest US companies. MSCI World, broad global diversification. Nasdaq 100, high-growth technology giants. Emerging markets, exposure to fast-growing developing countries. Total Market ETF, the entire market, from large to small companies. If you understand these 5 ETFs, you understand 90% of what matters in long-term investing. The key takeaway is simple. You don't need to pick stocks. You don't need to time the market. You don't need to overcomplicate investing. ETFs allow you to grow your wealth quietly, automatically, and consistently without stress. If this video helped you, hit like, subscribe to Money Mindset, activate notifications, and comment below which ETF you'd like me to analyze next. Thanks for watching, and as always, stay smart, stay curious, and keep building your financial freedom.